Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody. Now let's take a look on the gold market. So yesterday you can see the pullback that we discussed indeed has happened. So market has shown the downward action, even it's a bit stronger than we suggested, based on the positive ADP numbers. So investors now are worried that Fed might be keep hawkish policy a bit longer. In general, that led Fed to act with more freedom on the rate decision and tightening and so on. And that actually makes some pressure on assets across the board, including the Forex market, stocks, mostly in the United States, and gold market. So although you could see that the bullish context here is not destroyed, actually, it's because trend remains bullish. Market stands in the same consolidation, so OP target still exists around 1896, but we've got the bearish engulfing pattern on the top. And in the current circumstances, with this pattern on the back, it's not very attractive to think about the taking long position. So we need to see either when the retracement will be over with some extension of this engulfing patterns, market could keep going lower, or it will be erased by the just upward continuation. So that's why today's numbers on the non-farm payrolls probably has the big sense and could make impact on general on the performance of the all markets. On the lower time frame, mostly interesting on the hourly chart, take a look what's going on. I suggest still that downward action could be a bit stronger and could reach lower standing levels. It's just because normally if market shows just a pullback, it should complete some significant support area and to show logical and reasonable retracement. And yesterday we were considering this ABCD pattern. And we said that it will be perfect if market will reach the OP, which stands right there around 1840 area. It was also confidence support. And then retesting this consolidation and then starts upward action. So that's perfect bullish scenario. If it will drop lower, this context will be erased and we should be ready for a deeper downside action. Now what has happened in reality? Market really has reached it, shows minor pullback, that NDP numbers have been released. Market collapsed down. This drop stands even in excess of the XOP. XOP was right there. But I suspect that technically it was because of the closing of the gap. So market was needed to close this gap that had been formed 2 weeks ago, as you can see. This upward action, and with this spike slightly below the XOP, this gap has been closed. And currently, actually, guys, with this performance, it was in excess of the XOP. This is not bullish, normal bullish retracement. It means that we could get a bit deeper downside pullback, which is actually also suggested by the engulfing pattern. Besides, now you could easily recognize here the shape of the head and shoulders. So I had drawn this slope line, but you also could draw on it this more flat, something like this. So it doesn't make this actually change the core. So we have the same pattern. So, and it also suggests a kind of the A, B, C top pattern. Now the question where the C top will be. If payrolls will be good and strong as ADP, we could get downside actions directly right from this area. If it will be not as good, this market could show a bit deeper action back to the XOP, maybe 1849, 1850, which actually corresponds to the previous tops to the left, and we could get the C point right there. And then, theoretically, based at least on the technical picture and engulfing pattern, we could get this kind of the A, B, C top, D pattern down. So actually here you can see also important confidence support areas 1812, 1822. I will show you this level is important just because this is the starting point of this channel. So it's starting right there and it's moving to the upside. Besides, on the daily chart, around this level probably we'll have the oversold on the daily chart. Let's check this out. So you could see that's approximately, no, it's even lower, 1775. So anyway, this will be our strong confidence support, and if we'll get ABCD patch and their completion of this so-called hand and shoulder, something of that sort, we could get big regardless cheaper to buy, and action to the upside on the daily chart could continue right from there. So at least this will be an area of potential considering taking the long position, depending on what fundamental background we will have at this moment. But currently, personally, I wouldn't consider taking any long position, only if payrolls will change situation drastically, market will erase the hand shoulders that moving above the 1850, returning back to top. That will be the signal that probably no deep retracement will happen. But right now, at this point, technical picture suggests and tells that odds stands in favor of the two-leg retracement here, so it might be a bit deeper. So that's what we have. If you would like to take the short position, you probably could consider it, but be aware of the data release. So it's suitable not for everybody. It's not very pleasant moment. Sitting on the hands and see what will happen on payrolls report will be released. Some kind of the gambling component exists in this trading, and you need just to make the decision how to take the position. You could take position right there, you could take position right there, or you could just take it in both levels. Slightly, some part here, probably 30-40%, maybe around 1840. And if market will keep going higher, or on a non-farm payrolls release gives us some spike up, you could consider taking the second part of the position around 1850 agreement area, and then see what will happen. So that's actually what we have. Let's see how it will go.